The company being analyzed today is Regaal Resources Limited. This is a company which makes maize-based products. So today we're going to analyze the company's financials, what it actually does, and its future growth outlook. And this company has been growing very fast. So let us start now. First, we have a market cap of 742 crores. So it's a small cap company, not a very big company. Current price of one share is 72.3 rupees. The book value is assets minus liabilities. So book value per share is 44.6 rupees. The stock price to earnings ratio is 14.5. Return on capital employed 16.2. Return on equity 25.2, which is great, but these numbers may not be the most accurate. Screener numbers, great website. Now we have the profit and loss of the company from 2020 all the way to 2025. We have sales, operating profit, and at the very bottom, we have net profit. All these numbers are in crores. So, in fiscal year 2020, the company produced sales of 227 CR with an operating profit of 21 crores. In 2022, the company generated sales of 380 crores, and 2024 company generated sales of 600 crores. You can see massive growth. And finally, in 2025, the company generated sales of 915 crores with an EBITDA of 113 crores. All right, we move all the way down. We see a net profit of 48 crores. So, in terms of percentages, the growth percentage, the compounded sales growth, the CAGR revenue was 32% over the last 5 years, 34% over last 3 years, and TTM, trailing 12 months, the previous 12 months, what were the sales growth? 53%. While profit growth, compounded profit growth over the last 5 years has been 39%, last 3 years, only 22%. Interesting. And last 12 months, a strong rebound from the previous 3 years, 116%. And the price to earnings ratio 5 years ago was 23%, 3 years ago was 21%, last year was 25%. So pretty good return on equity ratio. So fast grower. The company has been a fast grower. Here we have the company's cash flows. Focus on cash flow from operating activity. Again, the figures are in crores. So in 2021, the company produced cash flows of 18 crores from its operating activities, 17 crores next year, 2023, 35 crores. But then after this upward trajectory, the company fell into a massive downward. 2024 minus 23 crores in cash flows, 2025 minus 11 crores. Seems like in order to grow very fast, a lot of cash flows a lot of cash was sucked into the business in order to fund this growth. All right, it's common in expansionary companies for cash flow to be negative. Depends on industry to industry though. Now, what does the company actually do? So, Regal Resources Limited is a leading maize-based specialty products manufacturer. So, maize-based specialty products. It operates, very important, an 825 tons per day facility in Bihar. All right, so current capacity is 825 tons per day. Then, fastest capacity expansion. The company scaled from 180 tons per day in September 2018 to 825 tons per day on September 25. So in 7 years, you can see massive expansion. Then we go down here, you can see diversified product portfolio comprising native starch, modified starch, value-added products, and co-products. And the widespread use of these products are in food, pharma, paper, textiles, animal nutrition. So a lot of industries it can actually cater to. So on the product side, okay, what are these products? Let's go a bit deeper. All right. Regal positioned for growth in the maize-based specialty products. So it's among the top wet maize milling businesses. Okay, it has the second largest maize milling plant in Eastern India, and its co-products we covered. Co-products include native starch, edible starch, maize gluten, fiber, and many more products. end industries. You can see a lot of end industries. So it's a pretty big market they can address. Pretty big total addressable market they can address. Then portfolio. So portfolio is divided into three parts. First, we have the main products, then we have the value added products, and then we have the co-products. From my understanding, co-products are like the byproducts. So for example, you form one of the main products and one of the byproducts in that production process forms one of the co-products from what I understand. So main products are native maize starch, yellow dextrin, oxidized starch, etc. And you can see the wide variety of applications they have. It can be food beverages, it can be dyes, it can be paper. Is that tapers? That's tapes, that's tapes. Textile finishing, coating agent, in cosmetics, various. Then we have the value added products. These are the more high margin, all right, more profitable one. Icing sugar, custard powder, baking powder, maize flour. Okay, these are also maize-based specialty products. And you can see they can be used in baking, meat products, cooking, metal polishing, water treatment, breakfast cereals, wide variety. This is massive. This is a massive one. Third, we have the co-products. We got maize gluten, maize steep liquor, enriched fibers, maize fibers, and the uses poultry, cattle, protein, energy source, beer, food production, livestock, feed additive, sweeteners, ethanol. Again, large variety of applications and many applications. That's a good thing. That's good. Now, moving on. Uh, Here we have the company's financial highlights. First, we'll focus on this. So, return equity and return capital employed as of September 2025, they look a bit muted. So, yeah. Then we have the net debt to equity in the red. Net debt to equity was 1.1 times, bit of a decline. That is a good thing. Net debt to operating EBITDA 4 times. Lower the number, the way better. Then we move on to revenue mix. Revenue mix. So here we have the revenue contribution from native maize starch, modified starch, value added products, and co-products, their contribution. So let's go to the first half of fiscal year 2026, H1 fiscal year 2026. 47.3% of the revenue came from maize starch. 0.6% revenue comes from modified starch. 1.2% comes from value added products, while 19.9% comes from co-products. So native maize starch is the main thing. And H1 of fiscal year 2026 is quarter one plus quarter two combined. All right, so native maize starch is first. After that, co-products is the second more important segment. Got it. Then comparative modes. Okay, what are these modes? First, it onboarded 70 new customers in the first half of fiscal year 2026. Diverse client base spans paper, food processing, and animal nutrition sectors. All right, so it's adding more and more customers. Then the facility achieved a peak capacity utilization of 99.7%. Massive peak capacity is being utilized. That is good for costs and all. And very important, they're planning to double their capacity to 1,650 tons per day by end of quarter four fiscal year 2026, which is March 2026. They're currently in December. So by March 2026, the capacity they're expecting it to be 1,650 tons per day. And they're one of the fastest growing players in the industry with a revenue CAGR of 36.9% from fiscal year 2023 to fiscal year 2025. All right, so big news, good utilization, great utilization, new customers, and big capacity expansion. Then the capacity utilization from 2023, 2025, and first half fiscal year 2026. Here we have the installed capacities, here we have the actual production in yellow, and here we have the capacity utilization. In 2023, 96.5% of capacity was utilized. This became 94.7% utilization in 2024, finally 99% utilization in fiscal year 2025, and first half 98.9% of the total capacity was actually, utilized. And these figures, I believe, are in tons. So all of these are in tons. So in fiscal year 2025, 2,45,824 tons were produced. In fiscal year 2024, 1.6 lakh. Then in fiscal year 2023, 1.25 lakh. In the first half, 1.3 lakh tons were actually produced. So that's yeah, okay, good, good, good. Moving on, hold on. Diversified customer base and distribution channel. So first, let's see this. Revenue from either top 5 customers, 10 customers, then repeat customers and unique customers. Okay. So, in first half of fiscal year 26, top 5 customers contributed to 32.5% revenues, while top 10 customers contributed to 46.3% revenues. Then in the first half of fiscal year 2026, they had 185 repeat customers. Number of repeat customers you can see is increasing from 2023 all the way to 2026. That's a good thing. Existing customers are liking the product, they're sticking to the product, and new customers are being added. 70 customers you can see in the first half fiscal year 2026. Then revenue. Okay. This is like the who are they selling to basically? Who are they actually selling the product to? So in the red, we have the end customer. The final customer is being sold the product. 24.7% directly, direct sales. I think so. Then through dealers, they're selling 68.4% of the products through dealers, and 6.9% are being sold to distributors. If I understand it correctly, I think distributors sell to retailers, and dealers could be retailers, but I will have to see. But basically, dealers, they sell most of their products to the dealers. And I think then throughout the supply chain, it gets basically transported to the end user itself. Now, here we have the operating income, the revenues. We have seen this. The EBITDA margin, we can see 12.3% in fiscal year 25, 10.5% in the first half fiscal year 26, 9.4 fiscal year 24. So we're looking at a barely double margin company. That's important. It's not a very high margin company. The profit after tax margin or the net profit margin was 4.5% in first half of fiscal year 26. It was 5.2% in fiscal year 25, 3.7 and 3.4 going back. Then we have the cash conversion cycle. How was the cash conversion cycle for me? Let me remember. First of all, lower this number, the better. All right. This is very important for the cash flows of the company. And if I'm remembering it correct, how long does it take for the company to to be get its raw materials to be produced and then converted into cash? Cash conversion. Okay, I will need to still definition, but basically, lower this the better. And 43 to 93, that is worse for the company's cash flows and cash flow management. While 70 days, first half of fiscal year 26, cash conversion cycle. Actually, we can just see it right here. Hold up. Cash conversion cycle meaning. Let me see. Okay, Google. So the financial metric measuring how many days does it take for a company to convert its inventory and resources into cash from sales? Yes, converting its inventory and resources. Inventory includes raw materials, finished goods, and capital work in progress. That is still being made, basically. That's still work in progress. Okay. Okay, okay, okay. How many days did it take to convert all of that into cash? Lower that, the better, which means it takes the company lesser days to convert everything into cash. In return equity, steady on the rise. See return on equity 16.1%, 17.5%, 20.3%. This one was 11.5%. Maybe it's seasonal. And in the second half, the quarter three, quarter four, everything bounces back. But let us see. Return on capital employed, okay, 11%, 14.2%, 11.1%. Okay. And we already saw net debt to equity and net debt to uh, operating EBITDA. We already saw that. And I think we have few or two more pages. Two more pages. Oh, growth strategies. Very important, growth strategies. So first, we already saw this. They're planning to double the capacity to 1,650 tons per day by quarter four. Yes. Then their total cogeneration plant, they have a cogeneration power generation plant, is being expanded from 7.1 megawatts to 14.8 gigawatts. Sorry, megawatts. So that is good. They're generating more of their power for themselves. For their like capacity expansion, the total investment needed is around 430 crore rupees, or 4,300 million rupees. And then they've already spent around 247 crore rupees. So 430 minus 247 crores remaining capital expenditure. And for their growth strategy, there's a part of product expansion, derivative products expansion coming in quarter four fiscal year 2026. So they're expanding their current product base, which is good. And then DAH, dextrose anhydrous, and DMH, dextrose monohydrate, are two more products being launched by, I think, quarter two fiscal year 2027. So more and more products are coming. Yes. And I think we have the one final page. One final page. As part of the growth strategies, first, only 1%, 1.07% of the fiscal year 2025 revenues came from South India. So there's strong potential for growth in South India, like Karnataka, Tamil Nadu, Andhra Pradesh, Telangana, and applications in pharmaceutical and healthcare. Their products have applications here also. And exports, 7.2% of sales fiscal year 2025 came from exports, around 65.4 crores, and 42.8 crores in fiscal year 2024. And the first half, only 3.9% of sales. Oh, maybe they're expecting a rebound. So the management did mention muted demand from exports. So let us see how fast Regal Resources can actually grow in the future. The capacity has grown a lot in the past few years, and they're doubling their capacity. So they're expecting for more fast growth in the future. Let us see how well does Regal Resources do in the future.